Thank you very much, Alain. Thank you, everybody, for being here today. So quickly, I'm going to take the next couple of minutes just to describe a bit of the company, where we're going, what our milestones are for 2020 and 2019, end of the year. A standard forward-looking statement. Why Osisko Metals? We control two of the premier zinc camps in Canada right now, the Pine Point camp and the Bathurst camp. Since we acquired these properties, we published two 43-101s. They're advanced projects with a tremendous blue sky opportunity, lots of room for discovery. This year we're targeting significant resource expansion, which we did attain, and I'll get into that a little bit later on in the presentation. Yesterday we disclosed a new mineral resource on this asset. Right now we have a solid balance sheet. We have about $13 million in the treasury with no debt, trusted reputation because of the association with the Osisko group, good technical expertise, and access to capital. Since we acquired the Pine Point project in February of 2018, we came out within 9 months with a mineral resource estimate of 38.4 million tons containing about 5.5 billion pounds of metal. Yesterday, we came out with our new mineral resource a little bit ahead of time. The new mineral resource is 52.4 million tons containing 7.4 billion pounds of metal. So a substantial increase from our first mineral resource, an increase of about 36% year over year. So we're very happy with the new mineral resource that was published yesterday. Bathurst Mining Camp, we also have a fantastic asset there that I'll get a little bit more into detail. It's more grassroots, but we also published a 43-101 on that last year. Our projects are well located in friendly jurisdictions, the Pine Point camp just north of Alberta in the Northwest Territories, and the Bathurst camp in the east coast of Canada in the province of New Brunswick. I draw your attention to some of our executive team and our board of directors that have a proven track record. Mr. John Brzezinski, who's the president and CEO of Osisko Mining, Luc Lassalle, president and CEO of Falco Resources, Don Seaman, extensive experience with PwC, Amy Satoff and Kathy Singer, both come from Dundee Bancorp, legal background, and our founder of the company is Mr. Robert Wares, who is part of the founder of Canadian Malartic, a world-class gold deposit, 13 million ounces of gold. Our share structure right now, we sit with about 149 million shares outstanding. We have 3 analysts covering our company right now with guidance around $1 for a target for the share price. Paradigm Capital, Canaccord Genuity, and Haywood Capital Markets. We have significant shareholders within the company, including Osisko Gold Royalties and Mine that hold approximately 17%, JP Morgan, 5.6%, there's Global Resource Fund, Zebra Holdings, BlackRock, Caisse de Dépôt, and management right now is a little over 14%. So we control about 54% of the company as it stands today. We've been focusing on zinc specifically, and this is a vision of our chairman. And what we've seen over the last couple of years, we've seen a chronic decline in these inventories. What we see here in the blue and the red is the combined LME and the Shanghai inventories. And what we've noticed over the last 10 years has been a chronic decline to a critical level. The critical level is basically 300,000 tons, which represents a 10-day world supply of concentrate. A couple of reasons why we've seen this decline in the inventories. There hasn't been any development in new projects, no new projects in the pipeline. There's been some environmental legislation put in place in China, where China used to be net exporter of zinc, and now they are net importer. So a lot of these factors have affected the inventories, and we continue to see this decline over the next period of time. Excuse me. So as I mentioned before, we hadn't had time to update the presentation here since our news release yesterday, but we're very pleased that now having 52.4 million tons grading at 6.5% zinc equivalent. So that equates to about 5.3 billion pounds of zinc and 2.1 billion pounds of metal in the ground. All our drilling since we acquired this asset has been over 100 meters, so this asset is it would be an open pit operation. What we like about this as well is that it has infrastructure in place, is proven proof of concept. Caminco operated this for 20 years from the mid-60s to the mid-80s, where they produced over 60 million tons of ore. So we have access to hydro. There's access to the property by paved road. There's over 100 kilometers of 25-meter wide haul roads there. And there's also an electrical substation that is supplying the nearby town called Hay River. The asset produced a high-grade concentrate, exceptional metallurgy that we'll see a little bit later on in one of these slides. It's a district-scale exploration upside. We have a huge footprint there. The property is 60 kilometers long by 30 kilometers wide, so there's lots of room for new discovery. We've conducted an airborne gravity survey looking for additional mineralization on this property. It's a new technique that hasn't been used on this property. We did this during the period of the summer. We're still trying to interpret the results of this gravity survey, and we're right now conducting a 5,000-meter drill program on the property. This gives you an idea of the size of the property. It's 60 kilometers long by 30 kilometers wide, as I mentioned before. The majority, 2/3 of the mineral resource is contained in 3 zones: the North Zone, East Mill Zone, and the Central Zone. So what we've done this year is that we've managed to acquire additional land because we were looking at some of the historical resources that existed, some of it just outside the perimeter of our properties. So we basically doubled our land package at Pine Point. Laurent, il avance plus. Excellent, thank you. So you see now, what we see in yellow here is that we double the land package, so now we're sitting at about 465 square kilometers. Additional land to do sufficient enough exploration. So our goal for 2020, obviously, is we're going to try to raise the bar a little bit more for the mineral resource and trying to find some new discoveries on this property. These are some of the high-grade definition drilling that was not included in the previous resource. Some very good grades there, grading between 6.5% up to 17% on widths between 2 meters to about 17 meters. Again, strong exploration upside with district-wide potential here. What we see, and I won't bore you on the geology, this is a plan view of the type of mineralization and deposits that we have there. They're basically formed by tabular deposits and prismatics. So as I mentioned before earlier, we conducted over 60,000 meters of drilling to define this resource, and then all the drilling was above 100 meters. So we know the mineralization can be found down to a depth of 250 to 300 meters. The reason why we've conducted this airborne survey, we're looking for additional prismatics or tabular deposits that might be below the level that we've already drilled. So a lot of potential upside. Just to give you an idea of the value of mining a zinc asset open pit at 6.5%. Mining 6.5% zinc open pit would be the equivalent of mining 2.5% copper open pit or 3 grams ton gold open pit. So a very profitable asset that we have there. And zinc mining is unique basically. 90% of the gold production is open pit, 95% of the copper production is open pit, but 90% of the zinc production is mined underground. The reason why it's so difficult to find. So we are really positioned with a unique asset here. It's a tier 2 asset that would be very attractive for a tier 1 producer, seeing now that we have over 50 million tons in resources. We did a study comparing some of our peers here. We are unique in the space actually with the tonnage that we have right now, the metallurgy and the infrastructure that's there. Basically when you're running a base metal operation, you have a couple of challenges, and the 2 main challenges are infrastructure and metallurgy. So a lot of these companies to the left here have higher resources than us, but you have to get your ore out and you have to have good metallurgy. So these are some of the these are the two main challenges that any junior company maneuvering in the base metal space has. This year we did some analysis on our metallurgy. We had basically the concentrates at Pine Point or premium concentrate. High recoveries, both over 90% for lead and zinc. The concentrate grades for zinc was between 63 and 64, and the concentrate for lead was between 68 and 72. The concentrate has very low impurities in it, very low in manganese, very low in iron, and very low in silica. So we would get a premium bringing this concentrate to any refinery. This gives you an idea of what the project looked like when Caminco operated it in the 60s, 70s, and early 80s, where we see the facility here. So you see we're about 45 kilometers from Hay River, which is the hub of the north, access to rail at Hay River. There is a paved highway that goes through the property, electrical substation. So the basic infrastructures to access the property are already there, which saves us probably about $200 million if we were to rebuild it. This gives you a visual of some of the haul roads there with the electricity that's running through the property. Obviously, we would be hauling out the ore by rail system, and as I mentioned earlier before, Hay River is the hub of the north where the railhead is. So what we see here is the Canadian rail system in red. So this would allow us to bring either the concentrate down to one of the local refineries, either Trail or Flin Flon, or provide us access to the Asian markets or the European markets. So quickly, I'm going to touch on Bathurst. Bathurst is not as advanced as our flagship Pine Point, but still quite a bit of potential on these properties here. We're focusing on a unique property. It's called the Kianakon property. We probably control the largest footprint in Bathurst right now, over 63,000 hectares. Bathurst was host of the Brunswick Belt. Host of the Brunswick number 12 and number 6, which was the largest underground mine in the world up until the 1990s, produced over 150 million tons, grading about 12% zinc equivalent. So I'm going to skip quickly to our property. This gives you a quick visual of our footprint. We're focusing more to the east, where the Brunswick number 12 and number 6 was. The Kianakon project is a little bit more to the east, northeast of that property. It was held by a private family for over 50 years. We managed to acquire this in early 2018, and we've done substantial drilling there. We've drilled out the historical deposit that's there, and we've actually opened up the deposit at depth and on strike. So this year, our goal, we've established a couple of targets throughout the property that we're going to be focusing on this fall. And this just gives you a quick cross section of some of the deposits that are there that what we opened up at the base of the main zone. And I'm going to skip quickly because my time is running out here. I'm going to skip quickly to the summary. So as I mentioned before, we have a 2019 fall exploration program going on right now, a lot of blue sky opportunity. Now that we've come out with our second resource, we're looking for additional resources, looking for additional mineralization with the 5,000 meter drill program that we have on Pine Point. Yesterday we announced our updated MRE. We've been targeting 50 million tons. We've obtained that. We actually surpassed that. So we've increased the mineral resource by 36%. Again, now we're sitting at 7.4 billion pounds of metal in the ground. We entered into an agreement to acquire, Adrian Day was here a little bit earlier talking about NSRs, and we managed to acquire a 3% NSR that was outstanding on the property at an early stage. That's beneficial for us because what we're going to be doing is we're going to be unencumbering a portion of that NSR, and down the road we're going to be leveraging the NSR for future financing. Another key element to keep in mind is that we're planning a PEA for Q1 of 2020. Thank you very much.